We begin, though, with our talk of the tape. The tech bounce as the Nasdaq surges, and some say the signs of a near-term bottom might be in place. Let's ask Stephanie Link. She's been cutting back her exposure to growth lately. She is Hightower's chief investment strategist, a member, of course, of the Halftime Investment Committee as well. Steph, I'm looking. It's nice to see you as always. A better than 300-point jump in the Nasdaq. Are signs now, as we ask, in place that this bounce can continue, at least that we have a near-term bottom?
Well, yeah, I mean, the sector is down 21% year to date, and some of the stocks, Scott, are down 30, 40, 50%. So could we see a bounce? Absolutely. Could it be kind of a lengthy one? Maybe. But I think you have to step back after the bounce and see what your view is on the macro. Do you think the Fed is going to be aggressive, and do you think inflation is going to stay high? If that's the case, you don't want to own long-duration assets. You don't want to own growth. But if you think the opposite is going to happen, that they're going to take their foot off the pedal and inflation is going to come down substantially, well, then, yeah, then you can. So I'm not in that camp that they're going to be looser, if you will. But that was the story today, and that was what was going around. But, you know, like, even though I'm underweight tech, Scott, I mean, I've been adding to Facebook. I've been adding to Apple. Accenture is a new name. IBM is one of my biggest positions. And so I have exposure, but I just don't have 28% of my portfolio, which is what the S&P 500 weighting is.
I know that you do not own NVIDIA, but I noted this earlier today. If you're looking for critical signs, perhaps, that you do have the ability to have a near-term bottom, I cite what Lee Cooperman, when he took us to school when he was with us a couple of weeks ago on sort of the Cooperman School of Investing. When you're looking for signs of a bottom, NVIDIA seems to me to be like case in point. You report the street's not enamored with it. It's somewhat of a disappointment. The stock goes down. Then it rips up. And not only that, it closes up on the day. That's got to be a key sign. I mean, it opened at 160, Steph. It went down to 160.22, and it finishes north of 178.
Yeah, no, I mean, it was a really impressive action, but I have to tell you, I listened to the call, and I don't own it, but I listened to the call. It was great. I mean, it was really good. I mean, 83% data center growth, 31% gaming. We know auto is tough because of supply chains, but that was down less than expected. Margins grew 10% sequentially, so it was a good report. The guidance you can explain away. My only problem with owning NVIDIA is at 29 times earnings. It's rich for me. I have owned semiconductors. I got rid of all of them in February, March time frame, because I am worried about, as the supply chain gets fixed, we're going to see double and triple ordering. I mean, my goodness, if Walmart and Target can double and triple order, so can the semiconductor space.
I mean, it's just what the doctor ordered. I'm looking at Apple, which you just mentioned, as another one of these stocks that you just have to keep a continuous eye on. Apple, again, low today, 137. Where does it close? North of 143. The importance of these mega caps, Steph, right? They led you up. You enjoyed the good times when they were all going up because of the heavy weighting that they had. And then you feel the misery when they go down because they drag the market down. They have an outsized portion of all of that. So what is the true importance right now of stocks like Apple, like NVIDIA, the Facebook you talk about, Microsoft, Amazon, and the others?
Well, I mean, Apple is 7% of the weighting in my benchmark, so, and I'm overweight that. So I have a lot of exposure to Apple, and I think they are very important. The big five, the big six are very important, and it's encouraging to see them rally. I have to tell you, Scott, you know I sold Alphabet, right, back in January. It's down 27% since then. I am looking at that one maybe to buy again, maybe closer to the $2,000 level if it gets there, because that stock has gotten awfully cheap and a lot of bad news is priced in. But I think these are all very important for the overall market, for sure.